All right, well, welcome everybody. Today we're joined by Patrick Yip of APMEX. He's joined us again. We spoke about a month ago. So thanks for coming back to us, Patrick. Good to talk to
Hey,
you.
Rob. Thanks for having me on.
Yeah, so I'm really excited about the precious metals market. They've been a little flat and maybe even down today or down somewhat recently. Can you talk about high level about the direction of the gold and silver markets?
Yeah, obviously we saw a pretty big decline in the last couple of days. I think gold's hovering around 1850, 1860, silver's in the mid 22s right now. I'm personally, kind of excited about this time, and a lot of it reminds me of what happened in the 1970s. And for people who weren't aware of what happened in the 1970s, you see a lot of parallels. In 1971, the gold price was pegged at $35 an ounce. We had an inflationary cycle. The Fed started raising interest rates during that time. As the Fed was raising interest rates, gold rallied from $35 to $200. So similar to what we saw in the last couple of years too. People said, "Hey, interest rates are inflation's rising, interest rates are going up. Shouldn't metals be going down?" Well, you saw gold hit an all-time high just a couple months ago, 2100. And then what happened in the 1970s is you had rates high, and then it pulled demand away from precious metals. So people are saying, okay, now I could have an Interactive Brokers account and get 5% on my cash. Well, why would I own gold, right? So that happened in the 1970s. In the mid 1970s, people said, hey, I don't want to hold gold. I think you're at a similar place right now where people are kind of losing interest in it. But that doesn't mean you should probably lose interest in it, because I think what's going to happen in the next year could be extremely bullish. So if you fast forward from the mid 1970s onward, the higher interest rates caused the economy to go into a recession. And at that point, the consensus out there with people is not inflation wasn't the top priority, the recession was the top priority. So the Fed says, okay, let's combat this recession, let's lower interest rates. And what happened there is gold rallied from basically $100 and the mid to late 70s all the way up to $800. So I think what's going to happen, and just my own personal opinion, no guarantees, but I think that we are overdue for a recession. Essentially, we haven't had a good recession. Not that a recession is good, but we haven't had a recession to clear out some of the excess since 2008. So you're now 15 years into a bull market. I think we need a recession to clear out some of this stuff. If that happens, I think the Fed's going to lower and gold's going to rally.
During the last couple of years, did APMEX sell any non-fungible tokens?
We did not. The only crypto thing we got into in that space is we do have BitPay, so people could pay using their cryptocurrencies to buy precious metals. But we didn't want to be involved in that sector. Just honestly, not a sector that we're experts in. So we didn't want to do that.
I didn't think I was an expert at Bored Ape Yachts or whatever. So I think those have collapsed. If people think metals are flat, look at like Bored Apes, total collapse.
Yeah.
So you're a precious metal holder and buyer. Do you see this as a great time to hold what you have or maybe add to your position?
I personally added, and I did so earlier this week. I can't say if it's going to be a great time or not, but that's at least what I'm doing based on what I'm seeing in the market, just on the macroeconomic level and on the retail side. So yeah, I'm buying.
Okay, great. Awesome. So with respect to APMEX is one of the biggest bullion dealers in America. So sort of as, I don't know what the old saying was, as General Motors go, there goes, that's where America's going type of thing. So like your trends are like the trends of the American silver and gold buyer. So what is the breakdown between gold and silver in your customers?
Yeah, I think the first thing, just to touch on your first comment too, yeah, we are one of the largest, if not the largest, precious metals dealers out there. We have north of 2 million customers. We've done 18 billion in lifetime sales. Basically, the largest guy out there. But my thought is the trends that we see at APMEX are likely indicative of the broader precious metals market. So it's not John Doe's coin shop in rural Oklahoma. It's a company selling 18 billion lifetime. Probably about 2 billion this year. But to answer your second question, the breakdown of gold and silver currently is about 67% gold and about 30% silver. The remaining couple percentage are the platinum, palladium, and your non-metal products.
Yeah, and so with respect to silver, has silver taken an uptick, say over the last 5 years?
Yeah, it definitely has. If you look at where silver is, at one point it was as high as a 40% mix on our sales, and that was during the silver squeeze time. Obviously, it brought a lot of retail public attention into the silver market. But I would say in the last couple of years, it has been trending up. So there is a lot more interest into silver. And I think a lot of people look at it too is as silver could potentially be undervalued. You look at it even today, it's around $22 an ounce. Back in 2020, when we had that pandemic crash, it went to $12, but it didn't last there very long. I think probably about a week. So my thought is to say, hey, maybe $12 is too low. It's $22 right now, but it's been at $50 twice in history. So maybe you got $10 on the downside. Maybe you got like almost $30 on the upside. So I think long term, silver could be a good investment.
Yeah, so this is really funny because I'm like a 10-ounce silver bar buyer or a 10th ounce gold buyer kind of frequently. And so I think a lot of people like myself are shocked how many people buy 1 ounce or bigger. So I was looking at one of your pie charts, and you had the 1 ounce buyer versus the buyer who buys more than 1 ounce physical product, and the fractional buyer. And it looks like the gold side buyer, someone who buys something bigger than a 1 ounce coin or 1 ounce bar, is bigger dollar figure than all the fractional added together.
Yeah.
So where do these big buyers come from?
Well, let me just first say that we have people all sizes of investors. I mean, you have people just getting started who want to put $100 into silver. You have people who are extremely deep pocketed and put tens of millions of dollars in precious metals. I think that there's obviously pros and cons of each one too. So starting with the 1 ounce, the 1 ounce is by far the most popular size in gold. About 63% of our sales dollars are 1 ounce products. That includes your Eagles, your Maples, your Krugerrands, your Credit Suisse bars, your Pamp bars, basically all the common gold stuff. I personally like 1 ounce gold too. I think it provides a nice balance between size and liquidity. The next thing, you could go to fractional. Fractionals are great because you have the extra liquidity. Like, so for example, let's say you wanted $200, you could sell that gold 1/10 ounce gold coin and get your $200. Whereas with the 1 ounce gold coin, you have to sell a whole coin and you get $2,000. Well, maybe you don't need to liquidate 2,000. You just want a couple hundred. The downside about fractional too is they tend to cost more on a per ounce basis relative to spot. So, for example, let's just look at the Gold Eagles, for example. We, as an authorized purchaser, pay about 3% over the spot price for a 1 ounce Gold Eagle, about 5% over spot for a ½ ounce Gold Eagle, 7% over spot for a 1/4 ounce Gold Eagle, and then 9% over spot for a 1/10 ounce Gold Eagle. So you have to figure, it's like, if our costs from the US Mint are higher on the 10th ounce coin, we have to, we obviously mark up all the coins. We make a little bit of a profit, but, there's more of a markup because we got to cover the higher US Mint costs on the 10th ounce gold coin. And then lastly, too, to touch on your point on the larger products, you do have a lot of people buying kilo gold bars too. The reason for that too is they look at it and they said, okay, well, for a given investment, they could get more ounces of gold for that kilo gold bar. So, for example, maybe a kilo gold bar is priced at, I don't know what they're currently priced at, but let's say $20, $30 over spot per ounce. If you look at something like let's say a Gold Eagle, you might be about $100 over spot. So the thought is they want to get more gold for their investment. The downside of it is two downsides. I mean, one is when you liquidate it, you can't liquidate a couple $1,000s. You got to liquidate a whole kilo bar, which is close to $60,000. So, obviously a pretty big thing to liquidate. The next thing is around tax reporting too. So there are certain products, and a kilo bar included, does require the IRS reporting. So, if you want something private, I would say probably stay away from that kilo gold bar.
Yeah, I think so. It's a good problem to have.
Yeah.
So getting back to the 1 ounce coins, there's 4 popular coins that I see on your list. Can you give the sort of the highlights on why people like one versus the other 4? Kind of what's the best part of each of the 4 top coins?
Yeah, so looking at the 1 ounce gold side, so the most popular coin is the Gold American Eagle, and about 48% of our dollars are the Gold Eagle. The next most popular one is the Gold Maple Leaf, so about 16 to 17% of the sales are made up of Gold Maple Leafs. Followed by there's a Gold Buffalo, which with about 14%, and then the Gold Krugerrand with about 7%. My thought is, if you are looking to buy a gold coin, I would stick with one of those top 4, so the Eagle, the Maple, the Buffalo, or the Krugerrand. And the reason for it too is they're recognizable, and they could be easily liquidated. The other coins are nice too. I like the Britannia, I like the Kangaroo, Philharmonic are great too. But let's say you are, a deep pocketed investor. You wanted to buy a lot of gold. You wanted to buy 100 ounces of gold. And the thought is, if you bought 100 gold eagles, 100 gold maples, no problem. You could liquidate that with any dealer because they have the demand to do that. Let's say you went and you said, "Hey, I think I got a good deal in gold Philharmonics." Like I said, great coin. I own a Philharmonic too, but just one. It's just, if you got 100 gold Philharmonics, and let's say you said, "Okay, I want to liquidate my 100 gold Philharmonics," and you went to your local dealer, the local dealer might say, "Hey, I don't really have the demand for 100 gold Philharmonics," so they're going to either decline your purchase or they're going to lowball you. So that's why, even if you end up paying a little bit more for the Eagles and Maples or the Buffaloes or the Krugerrands, I would do it because they are more liquid.
What's the attraction of the Krugerrand over some of the newer items?
Yeah, the Krugerrand is basically one of the largest or longest produced gold coin. I believe it was made in 1967. There's millions of these things trading around. They're just recognizable all over the world. So if you're in the US, you're in Europe, you're in Asia, people know what these things look like because they've been around for decades.
Yeah, so it just has history on its side.
Yep.
Okay, so I was looking at one of your charts about silver, and it was kind of a pie chart of which items you sell. And something jumped out at me because I was kind of drilling into, like, all right, how does that compare for silver? Like silver eagles versus maples versus Britannias. And the shocking thing is your 90% silver sales are more than Britannias, Perth Kangaroos, and Philharmonics combined.
Yeah, that's correct.
So it's pretty wild that something 50, 80 years old sells more than all of the Britannias you can get your hands on out of the UK Mint. So what's the attraction to this junk silver? And it's the staying power is amazing.
Yeah, and it comes down to a lot of it is recognizability. So, if I look at the pie chart, about 36% of our silver coin sales is the Silver Eagle, which makes sense. Obviously, a lot of people probably own Silver Eagles if they're invested into silver. Silver Maple Leafs make up 14%, also a great coin too. And then following that is your 90% silver at 11%. I think a lot of times with these products is people are looking for recognizability. So 90% silver has been around for, once again, decades, right? Since the 1964 and prior, right? They've been around for forever. People recognize what it is. People know what a quarter is. People know what a dime is. They could look at the edge. They could see it's silver just because it's a different color. If you ping it, it sounds different. It's very recognizable. So I think a lot of times people are looking at that just as a way to accumulate silver. Another thing too, some people, I don't know, I'm not one of these people, but some people believe that we'll hit a barter situation. I hope that we never hit there because I probably would not last too long, to be honest. But if you ever had to barter for certain goods, a 90% silver could be a good option because people recognize the coins, as opposed to if you brought something a little bit obscure, you brought an ATB or something like that, people might say, "Hey, what is this thing?"
Yeah, then and your pie chart, the Morgan and Peace dollars are a separate category from the 90%, and the Morgan and Peace dollars just by themselves are bigger than the Britannia by itself, or bigger than the Perth by itself. Yeah. So what is the attraction of the Morgan and Peace dollars in your customers?
I think, once again, recognizability is a good thing too, and then you also have collectors too who like this stuff. I think that both Morgan and Peace dollars are extremely beautiful coins. I know you have people who like collecting these different mint marks, different years, different grades. But yeah, certainly a lot of people are buying this stuff.
So here's maybe a kind of a process question, but I can see APMEX having relationships with mints around the world and getting, dibs like, hey, sell us a bunch of monster boxes and we have customers who want it. But where do you get your 80-year-old coins from?
A lot of times it's from dealers and from the retail public. We have a pretty big retail buyback network too. I think we spoke about that last time too. So people looking to buy, people looking to sell. A lot of times they look, let's say you had a bag of $500 face value, 90% silver. Okay, it's quite a bit of value, right? So you said, okay, well, how do I know that I'm going to get the value I need? How do I know that the seller is going to be credible? One of the things, I've sold metals here and there, and I'm always a little bit worried every single time I slap on the box and it goes off in the mail. And part of me wonders, is it going to make it to that other dealer? When it makes it to that other dealer, do they have a process that's going to ensure that it gets checked in? And are they going to pay me timely? Because you've heard about different dealers who went bust these days. I mean, I remember one of them that I dealt with back in 2011, 2012, but Tolving Company, they don't exist anymore. And, part of it too, and they were one of the most recognizable ones back over 10 years ago. But part of you always wonders like, hey, are you going to get the right deal? Are you going to get your products? Are you going to get your paid? And so a lot of people, they said, hey, I just want to go to the biggest, the best, know that I'm going to get a fair deal, know that I'm going to get paid, and just not have to worry about it. So we do buy a lot of the 90% from the retail public.
Yeah, so I can see when you get a monster box from the UK Mint, you kind of trust that those Britannias are silver. But how do you test like all of those dimes and quarters?
So we have a team down there, and I mean that's their whole job is receiving. So there's a couple different things too. It's like if you've handled enough of these silver coins, you could tell. It's just like they're experts in coins. I mean, you could be an expert in watches. You could be an expert in luxury handbags. It's like if you touch enough of these things, right? It's just like you have. We also do a couple testing too. So we have an XRF gun, which you could zap it and it tells you the basically the content of the metal. So 90% silver is going to be 90% silver, 10% copper. Your Gold Eagle is going to be that gold, silver, and copper mix. And then we also have a Sigma scope too, which you put conductivity, put a little I don't know what you call it, a little thing on the coin, and it tells the conductivity of the metal. And every metal is going to conduct electricity differently, whether it's 99% silver, 90% silver, gold, copper. They're all going to conduct electric differently. So we have a couple different tests that we put every single product that we buy from the retail public through. I mean, obviously, we want to guarantee that everything we sell is 100% authentic.
Yeah, that's great. No, it's good. It's good assurance to know when you send your money to an online dealer that you're getting silver in return. So I watch a lot of YouTube content creators, and some of them have personal stories where they share that I live in California, and we thought there was a wildfire coming, and then how many boxes of 500-ounce silver can I take out of my house when I really need to worry about the wife and kids and some photos and stuff? So can you talk about some of the options people have once maybe the size of their stack gets more significant?
Yeah, and that's a great question too, because everyone I've spoke to who got involved in precious metals, usually it starts with a couple $100 or a couple $1,000, and it maybe becomes 10,000, and then maybe if they're fortunate enough, it becomes a 6 or 7 figure sum. And I personally know people who have a 7-figure sum that I said, okay, well, it's probably not the best idea to have it in your house. You have a variety of different things. I mean, we're in Oklahoma here. Tornado could come over to you and blow down your house. California, you have wildfires. I had a buddy, we were talking about it before the call, and he was in a high-rise building in the Chicago Loop. And one time they were testing his fire system, and he just got home from work and he went up and he said, hey, I can't get in my building, and his gold's upstairs. And, you basically, you've heard about investment diversification. You should always diversify how much precious metals you own. And depending on your comfort level, like I said, I know people who store a substantial sum of precious metals in their house. And if you have a vault, if you have a security system, if you have something in place where you feel comfortable, go for it, right? But one of the things I personally use is OneGold, and I think it's a great way to divert your precious metals. And obviously, I'm speaking on different podcasts here and there. People probably know who I am. But what OneGold is, it's an online investment platform founded by APMEX and Sprott Asset Management. I think many of you guys probably know who Sprott Asset Management is, but we founded it back in late 2018. It allows customers to buy a vaulted position of gold, silver, or platinum stored at their choice of vaults around the world. So this includes the US, Canada, Switzerland, and the UK. What we first do is we have relationships with a lot of the vaulting companies. So we sign a deal with Brinks, with Loomis, with the Royal Canadian Mint, just vaults around the world. We then buy different products, so 400-ounce gold bars, 1,000-ounce silver bars, and then we put it in these vaults. And then we make the metal available for sale. And since we are buying a lot of these wholesale bars, they're not affected as much as the retail premium. So we talked a little bit about what gold and silver premiums and what they cost us on the US Mint side. 400-ounce gold bars you could get for a couple dollars over spot, sometimes even better. silver, you're getting at 20, 30 cents over spot for the wholesale 1,000 ounce silver bar. So we make it available for customers just to buy. When customers buy it, it's fully their title is in their hands, so they own it. It's fully audited by a top 5 accounting firm. It's insured by Lloyd's of London, or in the case of Canada, the Royal Canadian Mint. And then let's say you said, okay, I like the solution, and for whatever reason you possession of my gold or silver, we offer a redemption option where you could swap any of these positions in OneGold for any of the 20, 30,000 products available at APMEX. But I think it's a great way to make sure that you diversify your holdings. And like I said, everyone has their own thought. Obviously, I would say, don't go 100% physical. Don't even go 100% in OneGold. There's a right mix for you, depending on your comfort level.
Yeah, no, that's it's something to look into. I mean, on my channel, I always kind of talk about, paying off your credit card should be 0 before you start buying precious metals.
Yeah.
So you should have no debt as you're trying to save assets. But can you talk about the bullion card? Because it's in the right hands, it could be a very powerful tool.
Yeah, so the bullion card is something we launched last year. It's actually was my project that I led, but it's the first precious metals rewards credit card. So instead of like cashback or airline miles, you could get gold and silver back. So it offers 4% back on APMEX and OneGold purchases. We just did a sale where we did 10% back on select items. Actually, it's live right now. It's going to go down on Monday. We've done a couple times where you get 5% back on APMEX. But basically, you're getting rewards when you buy precious metals. So it offers 4%, 5% back on APMEX and OneGold purchases, 1% back on everything else. So this includes your gas, your groceries, your online purchases. It gives you 15,000 bonus points, which is a $150 value after spending $1,500. So you get a nice rewards there. It offers 0% APR for purchases for 12 months, 0% APR on balance transfers for 12 months. The card has no annual fee. Overall, I think it's a great card. I've not gotten a card in probably, 20, 25 years, and I just came to get this one. But, I think it's a great card. I know you mentioned credit card debt earlier. I think if you do have credit card debt, hopefully your listeners don't, but let's say you do, I would recommend that you could even get the card, transfer your high interest rate credit card debt to the bullion card. You get a 0% balance transfer offer for 12 months. Hopefully in that 12-month period, you could pay it off, but you don't want to be paying crazy high interest rates right now, especially with rates going up. I don't know what credit card rates are, but I would assume probably 20, 30%. So you don't want to be paying that type of interest. So I would say you could always apply for the bullion card and just move over your debt.
No, that's I didn't know that they had the 0% kind of transfer, or 0% for the first year purchases. So if people are responsible with it, I think it can be a great tool. Yeah, so you've been with APMEX for a while. You showed me some items, some precious items in your bookshelf beforehand. Can you share some things with us?
What is that?
Can you share some things from your bookshelf? Yeah, for the audience.
This is APMEX gives one of these coins. This is actually a 10-ounce silver round. They give so if you're with APMEX for 10 years, they give you a 10-ounce silver round. You're there for 5 years, they give you a 5-ounce silver round. I mean, overall, great company to work for. It was actually voted best places to work for the past, 4 or 5 years in Oklahoma. So that's a 10-ounce silver round. They also give out these, they give a Christmas round every single year too. So this actually, I just grabbed one. I guess this is the 2013 one, but I got nice. Like a dozen of those back behind there. But it's always neat because it's like every year that you're like, hey, what's the new Christmas round going to look like? And it changes every year, so it's kind of fun.
That's awesome. Very cool. Well, thanks for joining us today, Patrick. It's great to see you, and look forward to talking to you in the future.
Great. Well, thanks again, Rob.
All right, great. Excellent.